that we are covering. So it is called international arbitrage. And I want you to say that international arbitrage, or basically, you can say that arbitrage is the process. Arbitrage is the process. Arbitrage is the process. Arbitrage is the process of exploiting price differences in different markets. Arbitrage is the process. Arbitrage is the process of exploiting price differences in different markets. This is the process of exploiting price differences in different markets so as to earn a risk-free profit or return. So as to earn risk-free profit or return. So as to earn risk-free profit or return. So as to earn risk-free profit or return. So basically, the term arbitrage means taking advantage of the situation. Arbitrage is the process of exploiting price differences in different markets so as to earn a risk-free profit or return. Number two, you can say that arbitrage is buying one asset. It can also be defined as buying one asset and selling it in another market for a profit. It is also buying. It involves buying one asset and selling it in another market for a profit. The technique can be used in many markets. The technique can be used in many markets. So we have types of international arbitrage. Types of international arbitrage. Types of international arbitrage. Types of international arbitrage. The first one is called triangular arbitrage. Now, start with the covered interest arbitrage. The first one is covered interest arbitrage. Covered interest arbitrage. The first one is covered interest arbitrage. Covered interest arbitrage. Number two, triangular arbitrage. Number two is triangular arbitrage. Number two is triangular arbitrage. Number three is called locational arbitrage. Number three is called locational arbitrage. So we have three types of arbitrages. I want you to understand it in a simple term. I'm sure you've gone to the bank at some time and then you find interest rates differences between banks. You'll go to the bank and find that maybe KCB is exchanging dollars. KCB is selling dollars at 102 to 101 to 102. And then you find maybe another bank, probably, let me say 100 to 102. Another bank is selling dollars at maybe 99 to 103. Another one is maybe 102 to 104. So that could be DTB. And then this one is NBK, that is National Bank of Kenya, NBK. Now we have two banks that are trading that you can work with. Now what normally happens is that in arbitrage, the investors look at the price differences in the market and then they take advantage of that. I've seen this firsthand. Some people will come when they realize that the rates are different in the morning. They will make a call to KCB and book a rate. They also make a call to a DTB and book a rate. When you see rates like this, it means that the bank buys This bank buy here and sell here, right? That is for Kenya shillings against USD. So the bank buys here and sells here. It means that if you have dollars, and let me have this one, make it more practical. If you have dollars, you can go and sell it, give it to KCB at 100, and you can buy it from KCB at 101. But when you go to DTB, you can be able to give them at 102 and buy from them at 104. So whenever the exchange rates crosses the line, like in this case, you can make advantage. You can go and buy from KCB. You pick dollars from KCB. Let's say that you have 100,000 Kenya shillings. You can buy dollars at KCB, and then you book the rate at DTB and sell to them. They buy from you, so you are selling to them at 102. You are going to make a profit. To you as an investor, you're going to make a profit of 102 minus the buying price. You purchase them at 101 from the bank. So there is a profit of 1 shilling. Now, if you're working with, let's say, $100,000, that means that you made 100,000 times 1 shilling profit. That is a profit. You're going to make a profit. So you come out to when the rates are not, you see, let's have the rates like this. So we have, this one is 100, we have 101, we have 102, we have 103. You can come to KCB and buy, tell them that you need dollars. So you buy $10,000 at this much. They sell to you, KCB will sell to you at 101. So you're going to make some money. Of course, you're going to spend some money to buy dollars. So this one is how much? You are going to have 101, 0. That is the amount that you're going to spend to get dollars, 1 million. You'll spend that to get 1 million. That will give you those dollars, $10,000, but you spend 1 million. Then now you book another rate at DTB. They will buy from you the same dollars. You bought them from KCB, but DTB will buy them from you at a certain rate, 102. So how many dollars did you buy? You have 1,000. So 1,000, 10,000 times 102. Sasa we umenunua at this price, lakini unaenda kuuzia bank nyingine at this price, which is now this one. This is how much? You are selling at this price. So you are going to make a profit. Or you have 102, which is the sales, and you purchase them at 101, 000 like that. You are making a profit of 10,000 within a short time. Within a short time. Now, what have you done? That is called arbitrage. You have noted the price differences between one bank and the other, and you've taken advantage of that to go and buy immediately and sell and make a profit of 10,000 within even 1 hour. Just driving from one bank to another, you are done. You made your money. So the more you have, the more the deal is good, or the better for you. Now, that is called arbitrage. That is called arbitrage. Now, we have types of arbitrage, which I've explained, and we want to see how people make advantage of this. So the first one is called covered arbitrage. That is where you have realized that you have 1 million Kenya shillings, and this 1 million, if you invest it in Kenya, the investment rate is 15%, for example. But if you invest it in Uganda, the investment rate is 25%. Now, you have seen the differences in terms of the return. Uganda is higher, 25%, but Kenya is 15%. There is a difference. Of course, what you can do, if it is over the same period, you can decide to convert your money to Ugandan shillings. You invest it in Uganda. After some period, you return it back to Kenya. Then you compare that deal with what you could have gotten were you to invest it in Kenya purely. What will be the difference? Are you going to make some money? That's called covered arbitrage. I want to start with that number one and call it covered arbitrage. And then write for me that it is arbitrage, covered arbitrage. It is called covered interest arbitrage. It is the interest on deposit that you are covering. So it is covered interest arbitrage. It is arbitrage in which an investor makes use of forward contract. It is an investment, it is arbitrage. It is arbitrage where investor makes use of, it is arbitrage where investor makes use of this, where investor makes use of a forward contract to hedge against exchange rate risk. They make use of forward contract. Wanaelewana kwa ile rate ya 6 months at the time of maturity, wataconvert at what rate. So they agree with somebody that after 6 months, nikirudisha pesa yangu now from Uganda to Kenya, I'm returning back to Kenya, this will be the rate. So they know, they have agreed in advance. Na amefanya hesabu akaona hata lose, hakuna kitu ata lose, hata lose at all. So it is a strategy or arbitrage. It is a strategy in which an investor makes use of forward contract to hedge against exchange risk. To hedge against exchange risk. Illustration or example. An investor with 10 million Kenya shillings, 10 million to invest in 6 months. To invest in 6 months. The exchange rate between Kenya and Uganda are as follows. Spot rate 0.06 Kenyan shillings against Ugandan, or you can just say Ugandan shillings. 6 month forward rate is given as 0.09 Kenyan shillings against Ugandan shillings. Against Ugandan shillings. So, additional information, they're saying that interest rate in Kenya interest rate for deposit or just interest rate in Kenya is 15%, while interest rate in Uganda is 25%. Interest rate in Uganda is 25%. Calculate the gains from covered interest arbitrage. 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 Now, that is a scenario that I've just explained. It is called covered interest arbitrage, where there is interest rate differences. Interest rate here is 15, here is 25. So as an investor, you have an option. You have 10 million Kenya shillings. If you invest it in Kenya, kuna pesa utapata. And that is obvious. 6 months. But you can see that Uganda is better. additional 10 shillings on top, or 10% on top. So how do you take advantage of this? We shall be able to do this. I'm hoping that you've written that so I can confidently rub it out. Last semester, that was in August. In August, niliwafunza hii topic nafunza sahi, like 3 days to exams. Alafu examiner ni nani? Akaleta exact thing, exact example, right? And I don't know it was how many marks. Like it was around 5 to 6 marks there. So najua sasa hiyo ni sasa. An examiner ameleta exactly vile nilifunza hapa, copy paste. So sometimes these things you take them seriously, a little bit seriously, or a little bit serious. Which one is the correct one? So let's see how you can be able to maneuver this. As an investor, unakuwa mchonjo. You try and see if you're going to make profit. So let's say that we have 10 million in Kenya. Invest. We have Uganda here. So this is what you have today. Up until 6 months. 6 months. So the option that you have, you can decide to take, say, your 10 million. You can decide and take 10 million here and invest it and see what you can get here. So invest, direct, invest in Kenya. What will happen? You have 15% times 15%. We normally say that A is equal to principal into 1 plus R. So the amount that you get is 10M, right, into 15%, sorry, into 1 plus R is 15% times 6 months, not for the whole period. So it is 6 over 12. What are you going to get here? Mi naona hii inaenda hivyo and 2. This one is a half, so it is 7.5. From my side, I can see it is 10M times, this one has this is the same as 7.5 is the same as 0.075, right? Plus 1 inakuja 1.075. So this investor, if he decides to invest in Kenya, he's going to have his mere 10,750. So 10,750. Akiamua kuinvest in Kenya, atapata hii. Tuko pamoja? I like it. Some people are following. When I see somebody typing, I know somebody is following. Thank you. That is what he's going to get. He has an option of now transferring this money to Ugandan shillings using the current rate, spot rate. So convert using to Ugandan shillings using spot rate. And then you go and invest in Uganda. So we have 10. So you say that if 0.06 Kenya shillings is equal to 1 Ugandan shillings, then 10 million Kenya shillings will be how much? So you have 10 million times 1 all over 0.06. How much Ugandan shilling is this? Allow today to invest. So we have 10 divided by 0.06. It's a serious figure. So it is 166. I'm getting 166 666,667. That is what I'm getting in Ugandan shillings, right? That is Ugandan shillings. Now, that's the figure that we have here. Invest it now. Invest at 25% for 6 months. So you say that our amount is now, the amount that you get in Ugandan shillings is 166,666,667 into 1 plus 25% of 6 all over 12. Topesta ako karibu kuniambia songeza board. Move the board, I can't see. Topesta hapo iko sawa, si ndio? So we can have this to calculate it. How much is the total that will be there at the end of 6 months? Tumia calculator. So we have 6 divided by 12, unapata 0.5. 0.5 times 0.25, unapata that amount. Unapata 0.125 plus 1. So you're going to have 1.125. 1.125, that is the answer, times 166,666,667. Is it true that you are going to have 187,500,000? 187,500,000. 187,500,000. But of course, it is in Ugandan shillings. Now, if this is what you're going to get if you invest in Uganda, in case you invest in Uganda, utapata hii. In 6 months' time, you had agreed in 6 months' time that there was a certain rate that you exchange at. So, assuming that this person allows you to have that contract, we now want to now convert this amount to Kenyan shillings, and then we see. So move it to Kenyan shillings. So you say, convert it to Kenyan shillings. Convert after 6 months. After 6 months, convert to Kenyan shillings. So what will you get? You are going to say that if 0.09, that is the forward rate for 6 months, is equal to 1, therefore, how much Kenyan shillings will I get if I invest? Of course, this is 1 Ugandan shillings. If I have 187,500 Ugandan shillings. This is just cross multiplication. So this times this over that. So you're going to have how much? 27 times 0.09. You're going to have 16,850. 16,875, sorry. 16,875,000. Is it correct? 16,875,000. 16,875,000. Lakini kama ungeinvest in Kenya utaipata hii. Crossover, you will get this. In Kenyan shillings. This one is now Kenyan shillings. What is the arbitrage gain? Arbitrage gain is equal to 16,875 minus 10,750,000. And of course, that is how much. That is how much. That is how much. Ametumia hiyo janja, so amepata pesa ngapi? That is 10,750. 16,875 minus 10,750. 6,125. Wow, that is a good amount of money. 6,125,000. That is 6 million. 6 million profit. That is called arbitrage gain. Thank you so much. Imeeleweka? Hiyo mchezo imeeleweka? Na examiner can bring that. Akileta hiyo ni sosa. Hiyo unatoroka nayo mbio hapa. After hiyo exam ya August last year, mtu ananiambia ati mwalimu, exam ilikuwa ngumu. Na mimi nikiangalia na kukutana na the first thing ni ile nilifunza 2 days to exam, 3 days to exam. I told them, can you be a little bit serious? Just a little bit serious. A little bit serious. Sasa hii iko sawa. Let's now look at triangular arbitrage. Is there any question here? Florence. Sasa badala ya kuniuliza maswali hapa, now that you're online, unani-warn about the video. You are warning me about the video, and I'm here waiting for you to comment here. You miss asking questions. So that means that uko job. Kama uko job, text screenshot. Wewe ushaelewa. Text screenshot. Unachukua hapa na unaniambia tena hapa, chukua screenshot. Badala ya kupigana na Moses kesho na uko online. Si unyamaze tu hapo mahali uko kwa kona hapo na unapiga tu picha. Kabla ulale, unaweka kwa kitabu. So Moses akiwa class kesho hautamtafuta. Unaona tu hapa unasema hii nilisikia, ni kuandika si kuandika. Let's take the screenshot. Na kazi yako inakuwa rahisi. But I hope it is okay. Let us also be our brother's keeper. Take a photo. Kama uko na some good handwriting, just take a photo, napiga hiyo, unatuma pale. Ndio Florence kesho ama jioni nini akimaliza kazi anapata. So let's look at triangular arbitrage. Triangular arbitrage. That is number 2. Triangular arbitrage. Sasa hiyo utasema hivi. You will say that triangular arbitrage, it looks to profit from discrepancies among 3 foreign currencies. It looks to profit or gain from discrepancies between 3 discrepancies among 3, not between but among 3 foreign currencies. Among 3 foreign currencies, when their exchange rate across the market don't match up. When their exchange rates across the market don't match up. Just sometimes these things are very funny. Ni kama, for example, I want you to understand this thing. How are they not matching up? Sasa Let's say that we are trading mimi na Flo hapa na Ruth tunafanya biashara. Sasa mimi nikiuzia Ruth 1 kg of nyama. Ruth anazunguka anauzia Florence 1 kg of nyama. Florence akiniuzia sasa the same kg of nyama, tunapata imelose a quarter. Haitoshani na ile niliuza. Price is the same. But tukizunguka hivi, ikirudi kwangu, napata sasa sio 1 kg the way it was. What has happened? There is a loss on the way. There is a loss on the way. Right? So it means that amekula a quarter. So we are agreeing that, okay, we are talking about exchange. When we exchange with you, na huyu abadilishe na huyu sasa nirudishie, naona kuna ka loss. We are talking about the triangle. And I want you to talk about this in a serious sense. Look at this one, for example. Look at this one, for example. So we have USD against Euro is equal to 0.85. And then we have Euro against GBP is equal to 0.7570. Then we have GBP against USD is equal to 2. What does this illustration mean? What does this illustration mean? So let's say that 1 USD is equal to, let me make it understandable for you. 1 USD is equal to that one. One USD is equal to 0.85 euros. The same here, 1 euro is equal to 0.7 GBP. That is pounds. Pounds. And then we have this one. 1 pounds GBP is equal to 2 USD. From what we are saying, in the illustration that we were having, you can see that this one is like this. So can we test this? The implication is, we are trying to say that USD all over GBP, which was the same as USD, GBP, or Euro, let me say Euro, USD over Euro. That is what we were having here. USD over Euro is equal to that. So you can say that USD over Euro, USD over Euro, USD over Euro times USD over Euro, you know what it was? It was 0.85. So times USD over Euro times Euro over GBP. So that is this. Euro over GBP. That is what we have. So it is 70. So it is like 0.85 times 0.70. What is the answer here? What do you get? Taka mtu aniambie. What do you get? You just again this, which was this, times this, which is this. The same as 0.85 times 70. What do you get? That's what you get. 0.609. Clear? And what does it mean? This means that this one can cancel this, right? Or 0.595, right? So if you cancel euro and euro, this one means that USD all over GBP is equal to 0.595. But what were we having here? This one was the same as GBP all over USD. That was 2. That is what we got initially. This one was presented like this. GBP all over USD was 2. So this one is the same as GBP all over USD is equal to 1 over 2. Is it? No. No. I want you to, I want to make USD to be the one single unit. So if 1 GBP is equal to 2 USD, like this, then how much is equal to 1 USD? Still you have, still. GBP all over USD is 2. So USD all over GBP is in a half. Watu wamepotea. Watu wamepotea mahali. It's in a half. That is this times this all over this. So it is 1 times 1 all over 2, which is 0.5. So this 0.5 is basically the reciprocal. So that means that from this illustration, USD all over GBP is equal to 0.5. But here, USD all over GBP is 0.59. That means that if you decide to take it and go round, ukizunguka kwanza, then you come back to the same and compare this, you will gain. If you go direct, you will get 0.5. That is according to the direct rate. But if you compare these two, ukazunguka kwanza, ni kama umetoka hapa, ukakuja hapa, ukarudi hapa, instead of coming from here direct, you are finding that the exchange rate gives you a different example. There is a gain of 0.95. So you can see this one is a gain. Because you move from here, ndio ukakuja hapa. Instead of moving direct, umepitia hapa. So what are we saying? That this one, it takes the advantages that comes when there is a loss. So it means that wakati sasa tunatoka from me to Ruth to Florence, tunapata tumegain more than if I was to move direct. There is an extra portion. That is now what we call triangular arbitrage. So you take one currency, convert to another, and then back instead of that going direct. I want to look at an example now. This one was just to show you that really gain can happen in that case. So let's now look at the practical illustration. So I want you to have a situation where given the following illustration, for example, given the following exchange rates, so we have the first one, US dollars 1.9724 per pound. That is the first exchange rate. That for 1 pound is equal to $1.9724. 1 pound. Another one, you are told that we have here dollars 1.3450 per, say ni pounds ndio, or euros sasa. Euros. Right? Euros. And then we have the other one is, the next rate is pounds. This one is now pound, so dollars. Symbol ya euros inakaa aje? That is the symbol for euros. Don't confuse it with the pounds. Pound ni hii. Sawa. Euro ni hii. So the other one is euros. 1.4655 per pound. Those are the rates. Now, you are told to determine you're told that starting with $1 million, starting with $1 million, $1 million, determine the arbitrage gain. Determine the arbitrage gain. Now, one thing that you need to remember, whatever currency you started with, you need to come back to that currency ndio uweze kucompare. Kama ulikuwa na kondoo, fanya biashara, lakini rudi na hizo kondoo zako ukompare, uko na kondoo mbili ama moja. You can't compare a goat and a sheep. You have to compare at the same time. So whatever arbitrage that you're going to do, make sure that you are back to dollars and check whether kuzunguka kwako imefanya umegain, umefaidika, you've gotten more than 1 million ama umepoteza. So you compare what you're going to get with what you had initially. Najua unazazunguka ukirudi unapata hata umekula tu pesa na mabeste ukapoteza. But there are some times that you can go around and then make a profit with your money. So we have started our investment with 1 million. We want to move with a triangular arbitrage and see if you're going to get something ya maana. Sometimes I feel bad when I see people moving like now Henry network inamsumbua, topista na toka. Because you never know, you never know. So let's have our triangular arbitrage like that. So let's have the first there, we have it. US dollars. I can adjust kidogo. So we have USD, this rate here, and we are saying that it is 1.9724 per what? Pound. A pound. Then this corner, we can call it. So this is A, that is corner A. Then corner B. Corner B, you can name any. You can have B equal E. So this will be your, see, necessarily you start with this. Just put it anywhere, doesn't matter side. Just name them A, B, B can be here or here. And then you just give it one of the rates. Like now that is how much per dollars? Per euros. And then now this one remains C. So C is 1.4655 euros per pound. Sinasema network, I feel bad. I'm sorry for you guys what I mean. Network ilipotea hivyo. I sympathize with you. So that's where we are. Now we have been told that you are starting your business with 1 million USD. Of course, if you have USD, you cannot start with a rate that does not have USD. There is no way you can use this rate to convert this. We say at sasa, if 1.4655 euros is equal to 1 pound, therefore, how much, I don't even know, how much will give us 1 million USD? You cannot, as long as you have USD as the starting point, it can be euros, then the rate that you're going to start with must be of the same currency. Tuko pamoja? So going with that, it means that we only have two options. Either to use this or this. The rate must have it. We only have USD in this or this. Those are the ones that we can now use. If it was, let's say that we were having here euros or pounds, then we only have two options, either this or this, because hapa ndio kuna pound na hapa iko na pound. This one we cannot use. Pia kama ungepewa euros, ungetumia hii rate na hii haina euros. So we know that being that we are given initial investment to be US dollars, so we have to use this or this. Now, the idea is we need to come, if you start with this, you'll come here, and then go back. If you start with this, you'll move from here to here, and then go back. You have to go back to where you were, because the last currency that you'll find will make you go back. For example, if I take dollars, I will take dollars and change it to pounds. So that means that I've used this rate, I'll come to change it to pounds. So I'll be coming here with pounds. Convert this one to pounds, I'll come here with pounds. Now pound can help me now to convert pound and euros. Then I now take euros to this side. So when I'm here, I'm now comparing euros and dollars. So I have to go back to dollars by all means. So we are free to start. You can do potea pata, yani trial. Potea pata, trial. Start with any of these, and then we see which route will give us the profit. At the end of the day, you need to have the final value as well, and then you check whether you made a profit or not. So which one do you suggest we start with? Someone to suggest. Should we start with A, B, or C? We start with A. Fine. So if you are starting with A, you will say that if 1.9724 hapa imekaribiana na hii, let me write here, if 1.9724 dollars is equal to 1 euro or pounds, then 1M, let me just write it to full, $1 million is equal to what? So you'll have $1 million times 1 divided by this 1.9724. How many pounds are we going to get from that business? Tumeelewana? So that we get that pound, tukishapata hiyo pound hapa ndio tukikuja kubadilisha. So we are having 1 million divided by 1.9724. So we're going to have our 5. The answer is going to be 5 or 6. And you guys can see where I need to adjust here. 5 or 6. 9, 6.55. That is what we're going to have, but it is pounds. So we have started with A. We have started with A. Then we can now go to B. Sasa tumebadilisha. So we have changed it. We cannot go here now because there we don't have pounds. So we can only come to C. We can only come to C. So in C, you are saying that if 1.4655 euros is equal to 1 pound. 1 pound. Therefore, how much euros are we going to have with our 506 pounds that we have now? So we're gonna pounds. 6.55 pounds. You will multiply this times this all over this. Cancel that. So we have that answer times 1.4655. 4655. We are going to have a figure that looks like this. 4743 033 no 003.45. But this one is now euros. So we have euros. Thank you. That's okay. Now, we now convert euro to, so this was C, no, actually, that is C. So now, convert back to B. Convert back. So this one is convert pounds to euros. That was it. Now convert euros back to USD. Then we compare. That is the last stage. That is number B now. So how do we do it? Same way. You now say that if 1.3450 dollars can give us 1 euro, then how much dollars will we get if now that we have 743,003.45 euros? You multiply, sindio? So it is this times this all over E. Because euro cancel euro, so you have this times this. Get it? How much is that? So you're having 1 point times 1.3, 450. 1.3, 450. So we are going to have our answer to be 9, 9, 9, 3, 3.6, 4 euros, USD. Have we gained or we have lost after kuzunguka? Have we gained or lost? That is a loss. Therefore, that means that there is no arbitrage gain. Nobody wants to do any business in an apata loss. So you say, what will be the loss? Hapo chini say that if we go A to C to B root, that root, A to C to B root, gives a loss of 99.9 was 1 million. Eh? What is the exact figure? Oh, there are 3 nines. Then 3 upper to the 9. 9 up. 9 upper and then 64. So gives a loss of minus 1M. What is the amount of loss? Negative. $660.36. Not allowed to make arbitrage loss. Not allowed to make arbitrage loss. In business, you're not allowed to make arbitrage loss because arbitrage is about taking advantage and make profit. So you're going to make arbitrage loss. So what do? Change the root. So we change the root. And now use the other one. So we can say root B. Take root. Take root. A, B, C. So A, B, C, you start with A. You start with A. And you say, if 1.9724 is equal to 1 pound. Therefore, 1 million is equal to, that is million USD is equal to what? So get it? We got how much? 1 million, tulikuwa tumepata ngapi? Or do you want us to take a different route? Tutumie hii. Hii tukitumia tunaenda hii. We shall come here. If you get this, like this, I want you to understand. Sasa zingine una reason too. Unasema, if we take this other route, we are having dollars. If we take dollars and come here, we are going to change everything to pounds. So we are going to have pounds being changed to euros. So at the end of the day, we are going to have our euro. That will be the last one. Because we don't want to come direct, so tunazunguka hivi ndio tupite hivi. Kutoka A to B to C. Instead of A to C, we want to go A, B, C. So at the end of the day, hatutakuwa na dollars hapa. Tukifika C, hatutakuwa na dollars. So there will be a problem. Because our final currency will not be able to compare it. We shall not be able to compare our final currency with $1 million because hatutakuwa na dollars hapa. So that means that we cannot take this route. We can now take route number B. So we move from B, because B also has got dollars. We can now move from B to C to B, because this one has dollars. So the final one will be dollar. So tunatoka kwa hii dollar to other currencies, then from those other currencies back to dollar. Tutakuwa tumeenda kwa hizo stages zote, and our final currency will be dollar. So we start with B, C, and A. So that is how you reason. So you need to move each stage. Toka hapa kuja hapa final, or E here then here final. Make sure that the final currency is in the same currency of the original amount. So we are having B to C to A. Why? Because A is going to give us dollars. So therefore we can say that our dollars is $1.3450 is equal to 1 euro. How much is this? How much is that? So we have 1 million divided by 1.3 or 50. We're going to have 743,494.42 euros. After that, the next stage is now, remember, is it tulimalizana nayo? Now convert, number B, convert euros to pounds. Now we are coming to C, convert euros to pounds. So you will say if 1.4655 euros can give us 1 pound, then how much this euro is? 743,494.42 euros, giving us so we're going to have this times this divided by this. So whatever answer that you're getting, divide. So divide by in euro. So how much pound are those? So we have 1.4655. So we're going to have 507,331.57, in fact 58 pound. Now from this one, go to, we are now tulianza na B, so tulianza na B, then tukakuja C. So convert pounds back to USD. So we are coming to A. So we are now in A. A now. There. So you say, according to the rate, 1.9724 dollars is equal to 1 pound. Therefore, how much dollars will we get with 507 331.58 out. So you multiply this times this over this. So it is multiplication. 1.9724 times 507,331.58 all over 1. How much are we getting? So the answer here times 1.972. We are going to have 1,660.7, in fact 0.80. Is it arbitrage gain or arbitrage loss? Then you now say that arbitrage gain is equal to 1,660.8 minus 1 million that we started with. All of them are just big. The answer there is 660.80. That is arbitrage gain. So in exams, that is the best option that you can take. Is it so difficult to kuzunguka? Was it not easy? Was it difficult? Hiyo sijaona wakiset of late. I don't know if they can decide to bring it. The last time they brought something close to that was in 2015. 2015 May. After that, which year again? Sijaona ingine. 2015 May. And, if you get lost, if you get a loss, you can change the route because they will need you to get arbitrage gain. The answer is to get arbitrage gain. So if you get loss, you just change the route. Make sure that you follow what I say. Rule number 1, you look at the currency that you have been given as the start. If it is dollar, you can only start with this or this. That is rule number 1. Number 2, you have to use all these exchange rates once. So if you start with this, toka hapa, ukuje hapa. Then utoke hapa, ukuje hapa. If you start with this, toka hapa, ukuje hapa. Then utoka hapa, ukuje hapa. The first and the last exchange rates must allow you to use the dollar. Must allow you to use the dollar. If it is pounds, they must allow you to use the pound. So kama umeona make a loss, you can always revert and make profit. So the only mistake that will happen is that you might waste time kuzunguka hivi, then hivi, then hivi. But let me see. If you want to use the formula that we are using, that is, though it can take you time, that you are having USD all over 1.972 all over pound times another one that has got pound. This one has got pound. Pound is here. So this one can be euros. Euros 1.46655 all over pound. Now that is, both of them will be over. So that is not the best one. You cannot cancel each. Maybe this one cannot work the way I was thinking. It can't work with the other formula that you're using. So just try the way we have done this. That is it. Let's look at the last one before we look at another example. Let's look at locational arbitrage. So ukipata loss, just save time. Make sure that you use a lot of, you move with the speed. Ukienda hiyo direction na upate loss, rudi haraka na ufanye the correct one, and you'll be sure that now you've gotten that marks. It's better than kunyamaza tu ama kusema hii ni ngumu. Jaribu, enda hii direction ya kwanza, kuja hivi. Ukirudi hivi unaona ni loss, cancel, ignore, start another one. Even now, and you'll be able to get it. And now you are sure. Move to the next question. Don't waste time, because you know it is about kupatia further. And these guys will still mark. They will still mark locational arbitrage. So the last time they said that one, they can bring it, by the way. The last time it was brought was in 2015. That was question number 5. They gave different rates. We can try it, but later, because of time. Though it is just like that. The only thing that I think might confuse you is that the rates that were given this time, which I need to clarify, the rates that were given, they gave you the rate like this. They were saying that you have been provided with the following series of exchange rates. You have been provided with the following series of exchange rates: United States dollars, the Canadian dollars, and the British pound. And then they say that dollars 0.600 against Canadian dollars. So ukiona hii ni Canadian dollars, C/dollar, that is Canadian dollar. Sasa, but this one is US dollar. Canadian dollar, US dollar. And then now the other one was US dollar 1.2500 pounds. And then now they have Canadian dollar 2.5 against pound. So you can see that dollars are 2 here, pounds are 2 here. Right? Dollars are here, pounds are here. But then they were saying, after giving this, these are the exchange rates. They are also given in front of this, mbele ya hii wameweka hivi 1.667 per US dollar. Alafu hapa wanasema pound 0.800 per US dollar. And then here we have pound 0.400 Canadian dollar. So wanasema hivi. You have been provided with the following series of exchange rates for the United States dollar, the Canadian dollar, and the British pound. Alafu wakaweka hii chini yake. Then they are saying, assume that you have been given 1 million in cash. Assume that you have $1 million in cash. $1 million, that is $1 million in cash. Hiyo ndio unaanza na biashara. Required, demonstrate how you could take advantage of the exchange rates to obtain an arbitrage profit. Demonstrate how you could take advantage of these exchange rates to obtain arbitrage profit. So, ukipewa rates kama hizi na hizi, don't be scared that these guys are giving me a lot of things or which one to use. It is either you decide to use this one or this. They mean the same thing. If you want to know, see this one. Wanasema ati hii 0.600 is equal to 1 Canadian dollar. What does this mean? If 1 Canadian dollar is equal to 0.600 US dollar, then what can be equal to 1 USD? That is what they are trying to say. Now they have expressed it as per Canadian dollar, for 1 Canadian dollar, but happening for USD. They have just said that this rate is the same as this. Now this one, if you calculate, unapata ngapi? This times this all over this. So that is 1 times 1 all over 0.600. Tell me, the answer that you're going to get here should be Canadian dollar. How much Canadian dollar is equal to 1 USD? Calculate, unapata ni ngapi? So it is 1 divided by 0.6. Utapata ni 1.667 Canadian dollar. Right? So it is the same thing. They are telling you that 1 USD is equal to this 1 Canadian dollar, which is the same as this. Need to express hapa na hapa. We are just giving the same thing. So decide which one to use. Ukiamua kutumia hii, sawa. Hii na hii iko sawa. This one is the same as this. This one is the same as this. The only difference is that here they have expressed it in terms of per pound, but here per Canadian dollar. Let's take the second one. One. So unaamua tu unatumia moja kati yao, they are the same. Let's now think about number 2. For example, they are telling you that this one is that. So we are expressing it in terms of 1 US dollar. So you say that if 1.25 USD is giving us 1 pound, then 1 USD is equal to how many pound? Because now we want to express in terms of pound. So we have 1 times 1 all over 1.25. Hebu niambie ni ngapi? How many pounds are those? Then sasa useme that number of pound, you say that pound, whatever it is equal to 1 USD. Because we are finding the equivalent of 1 USD. So just divide it. Now the apparent is the same. So it is 1.1 divided by 1 times 1 divided by 1.25. So the apparent is 0.8. 0.8, which is this. So that means that this expression and this is the same. This and this. Hata hii ukicalculate na kupea the same answer. So ukipata kwa mtihani, usiangalie hivi na umestuka unasema hizi vitu ni mingi, sasa sijui tutumie gani. No. Test uone kama zina make sense. Ukiona hii na hii they are the same, pick one of them and use. Just pick one of them. It's only that the expression has been changed, but the value are the same. The values are the same. The exchange rates are the same. That is the only thing that could have disturbed you in that particular question. Starting with 1 million, you can now try it. However, let's look at something else, that is locational arbitrage. Say that locational arbitrage involves two countries. It involves two countries, currencies, or two currencies. It involves two currencies with different exchange rates in different locations. It involves two currencies. It involves two currencies with different exchange rates in two different locations. Like the one that I told you earlier between KCB and Diamond Trust Bank. So let's say that you have exchange bureaus up in town. Most of them near Wahindi na Oria, right? So how unaweza pata ukienda mahali rate is different from the other one. So let's take example. Illustration. This is the one that I explained earlier. Ile nilifunza ya kwanza, nilieleza ya kwanza. Say that we have two currencies here to be used to gain an arbitrage gain. We have two currencies here to be used to gain an arbitrage. So we have your X and then we have your Y. Those are bureaus, forex bureaus, X and Y. So in X, the exchange rate is like this. And Y, in fact, let me use Tanzanian shillings. And Y, we have 0.09 to 0.10 Kenyan shillings against Tanzanian shillings. That is Y. So we have two bureaus. Ukienda kwa shop, this is the exchange rate. Kenyan shillings against. One thing that you can see, that hakuna mahali hizi rates zinakutana. Unajua ukipata that maybe one was like this, another one is 0.0908 to 0.09. Wamekutana hapa kwa 8. You cannot make profit because you will buy and sell at 8. Umefanya zero work. Whenever you realize that they are not meeting anywhere, 8 and 9 kuna boundary. So 8 iko huku, 9 iko hapa. It means that you can cross the exchange rate. You can move across two different exchange rates. The upper limit here is lower than the lower limit here. There you can make profit. Na nataka ujaribu hii route kesho. Ukienda town, uchungulie kwa makini, uone kama hizo exchange rates like that. If they are crossing, take advantage. Tafuta dollar, exchange, make money. Kabla ufike job, wewe uko na pesa ya rent for the month. Sawa, tafuta dollar and exchange. Kabla ufike kwa ofisi, ushatengeneza. If they are not meeting, 8 and 9 hazijakutana, kuna boundary. So the upper limit here, this lower limit, upper limit, this lower limit, upper limit. So the upper limit here and the lower limit here are not meeting anywhere. So what do? An investor has got 3 million. An investor has 3 million to start. Kenya shillings to start. Show how they will make an arbitrage profit. Show how they make an arbitrage profit. So how they will make an arbitrage profit is now like this. It is locational because it's from one location to another, from one point to another. The rates are different. They'll make it like this. An investor will buy from X, buy from X, 0x at 0.8. That means that the bank will sell to you at 0.8. Then sell to Y at bank Y or bureau Y will buy from you. They will buy from you. So you sell to them. Sell to Y at 0.09. So you say that if 1 Tanzanian shillings is equal to 0.08 Kenyan shillings, then how much Tanzanian shillings will be 3 million Kenyan shillings? So you'll divide that. You'll have 3 million divided by 0.08. You'll have 37,500,000 Tanzanian shillings. That is what you're going to have at the end still. They now sell to Y at 0.909. So you say that if 1 Tanzanian shillings is equal to 0.09 Kenyan shillings, then how much? Because now you're selling at a higher price. You're selling at a higher price than buying. Then how much will this one be equal to? So it is 37,500 times 0.09. How much is that? You get 3.375 Kenya shillings. Then your arbitrage gain is equal to 375 minus 3 million, which is 375,000. That is the arbitrage gain. That is the arbitrage gain. Na kama unafikiria nadanganya, let me show you what was brought in that year. Alafu tuende tulala, si? Ile tupumzike kidogo. Hii topic I hope you guys did it well. Mulisoma hii vizuri? Eh? Expected portfolio. Hii topic number 2. I hope you guys have revised it well. Kuna videos I gave it long time ago. I hope umepitia na ukapitia, so should not be a problem. Bwana, hii ni last sitting, ndio? Which sitting was that? This is that is 2015. Haya. Ilikuwa rahisi aje. Umeulizwa tu money market and forward exchange market. 6 months, that is 12. Imagine sasa unangojea tu kupita. Wewe sasa unangojea tu kutafuta 38%, pass mark is always 50. Na nyingine ndio hii. Wamepewa hii pia. Sasa walisikia vizuri. Wamepewa hii pia. Hii tulifanya jana. Sasa walisikia vizuri aje. I want to check class sitting. The arbitrage again. Ndio hii. Ndio hii. That is August 2023. James Kamau had 3.6 to invest in and is considering the foreign exchange market, forex market. The following information relates to two forex bureaus, X and Y. The quote rate is given there, Tanzanian and Kenya shillings. The two forex bureaus are the same. Calculate the locational arbitrage gain for James Kamau with this one, if any, 4 marks. Explain the scenario that is necessary for locational arbitrage to exist. Sasa hii, number 1, I'm sure you can do. That one you know. What are the other scenarios, the condition that should be fulfilled for this thing to be working, for it to be real? Number 1, I've explained some here. Ruth, can you tell me one of the things that should happen for it to be possible? The two conditions, which ones? Let me unmute you. Just say one. Ruth hayuko hapa? Ako. Ameogopa kuongea. Aya, Mary, hebu tuambie, for that thing to work, what must be there? Which conditions must be met? Just choose two. Just guess 20. You can talk.
Dennis, maybe there should be brokers, forex brokers in the market.
There should be forex brokers in the market. Another person? Or another one? Another point? I say the number 1. The rates that we're talking about, the lower limit in one, the lower limit in the exchange rates, or we are saying that you can say that the buying rate, buying exchange rate in one bureau must be higher than the selling rate in the other. Sio tumesema. Sasa mbona unataka hii max iende? Hiyo tumesema. Number 2. Which one again do you think must be met for it to work? Which one again? The exchange rate between the two, the exchange rate between the two bureaus must be of the same currencies. If it is Kenya and dollar, kienda pale must be dollar and Kenya shillings. You cannot compare one unapewa Tanzanian shillings and Kenya shillings, another one Kenya shillings and Ugandan shillings. Those are two currencies or three different currencies. So you are saying that the exchange rates in the two locations must involve the same currencies. The same currencies. That is, if it is dollar and Kenya shillings, kienda pale dollar and Kenya shillings for it to work. Otherwise, if you are comparing, you cannot buy here. Sorry, you cannot buy Kenya shillings against dollar and then you go and change with a different currency. So story tumemaliza. Now I can release you to go to exam. Ndio. But tena nikifikiria kitu naweza kuja tu tunaangalia. Most likely on Friday nikifikiria tu kitu naweza kuja tuangalia. Otherwise kesho wacha tuangalie other area. I'm just trying to advise you guys, try to watch topic number 2. It doesn't miss in exam. We're talking about bond valuation, eh? Sawa. So tufanye bond valuation. Uliona kwa one of our videos, eh? So tutafanya hiyo bond valuation on Friday. Ama niliwaambia tukianza hii topic. So tutaangalia on Friday bond valuation. Inakuanga hata kadogo. I think to exhaust. Topic number 2, make sure that you watch. Hiyo topic number 2, it never misses. It never misses exam. So you ignore it at your own risk. Kama una hizo videos tafuta. I gave it a long time ago tukiwa topic 1, still. You gave those videos tukiwa topic 1. Another area that you need to look at. So make sure that you watch topic 2. Another area that you need to look at is the cryptocurrency. Cryptocurrency, it can be 3 marks or 1. Just look at the challenges faced in trying to implement or use cryptocurrency and probably the advantages of cryptocurrency. Challenges in using cryptocurrency and the advantages. Understand what it is all about. You can even Google. It's a theory, very small area. Once you may learn what they are, the types, and then challenges faced by countries trying to adopt cryptocurrency. So that is an area that you should look at. Another area that we agreed was under international finance, the functions of World Bank. Functions of World Bank. Pia tulisema utaangalia, si ndio? IMF, World Bank and such like. Let me see if I can get a few. I'm sharing on WhatsApp functions of World Bank. I'm just trying to share a few theories that I think you need to take note of, so that when you are revising, you can also look at them.